Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be taking a pair, breaking it down from a technical and order flow perspective to try to understand where we have the highest probabilities of the next potential move. And in doing so, I will provide as much free education as possible. So I really suggest that you stick to the video to the end, and I will see you on the charts. In today's video, I want to speak about USDCHF because at the moment we do have quite interesting price action and structure. Starting here from the monthly, in fact, what we can notice is that we are currently testing previous monthly resistance, which is now turned support. In fact, this area was acting as previous resistance here. Again, here the market broke it to the upside. At that point, all that previous resistance was turned support at this level. And we can see how the market has just tested it and has already started rejecting it to the upside. Now, in general, if you have an impulse and you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the zone that the market just retested is exactly the one in between the 0.618 and 0.786 of the Fibonacci taken on this monthly impulse, which is a very strong area of monthly demand and support from which we could expect more potential bullish continuation. Dropping down on the weekly, what we can notice is that the market at the moment has broken above previous weekly support, which was supposed to be turned resistance here. The market, however, broke it to the upside, and from here, we could expect more weekly continuation. Dropping down on the daily, what do we see? Now, from a daily perspective, we can see how the market has just printed this overextended M pattern. I made a full breakdown of USDCHF when the market was here, explaining all the reasons for which we could expect this rejection to the upside. And that is in fact exactly what the market did. And by the way, I will link in the description this previous analysis, so you can go and check it out for more free education. But then the market has actually completed the pattern, what we could be looking for potentially next. Now, from a daily perspective, we must notice how the neckline has now been broken to the upside. This previous support, which was supposed to be turned resistance here, got broken to the upside. So now it is again acting as support here. And in a situation like this, what we could actually expect is a retest of this level and then a potential rejection higher. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the CHF, we can see how with the last reports, we went from having a very negative net positioning to now having a slightly positive net, starting to get positive net positioning. But overall, we don't see longs added with the last report yet. We actually see longs getting closed, which indicates that there is definitely the possibility for more bullish continuation before we start to see net positions shifting to positive and actually seeing thousands of longs getting added on the CHF, which at that point would drive USDCHF lower. So in a situation like this, we could expect a retest of this level and a rejection higher, basically for the creation of this quite weird inverted head and shoulders and the completion of this daily impulse correction and impulse pattern to the upside. So if the market will actually complete this impulse and provide a correction to this area, how we could be looking for this potential longing opportunity for the completion of the impulse correction and impulse to the upside. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move to the upside for the completion of a nice impulse correction and impulse pattern. Now, if you don't know what I'm speaking about when I say valid entries and this kind of things, that is all part of the mentorship program, which you can find on transparentfxtrading.com. If you scroll down, you will see that here you have the possibility to gain access to my entire course plus all the rules of the strategies. There's also the possibility to gain access to one-on-one private mentoring, the web market breakdowns with the Telegram signals, the COT data software that is the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll down past the testimonials, you will see that at the moment I'm running a special promotion in which you have a big discount on the upfront price, and I have also partnered with the Forex broker Blueberry Markets, and if you open an account with them, you also have the possibility to get a full refund credited back in your trading account. And if you scroll down, you will see that here at the bottom you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does help with the YouTube algorithm, and I will see you in my next video.